Do you want to be showered in cash?
This could be you if you invest in dividend-paying stocks. Hey everyone, and welcome back to my channel. Today I'm going to be going over what dividends are and the importance of dividends. So just a quick recap, let's quickly go over what a stock is. A stock is a tiny piece of ownership of a company. So the more shares you own, the more ownership in that company you have. So as we've discussed before, stocks can earn you money in two ways: through capital appreciation, also known as capital gains, or through dividends. So capital appreciation occurs when you sell your stock for more than what you paid for it, meaning you made a profit. Dividends are when the company pays out a portion of their profits to their shareholders. It is important to note that not all companies pay a dividend. Typically, more established companies pay a dividend, and these companies tend to have a history of reoccurring and reliable income. Companies that don't pay a dividend tend to be growth stocks, which are companies that are newer or in the tech space, and the only way to make money is if you're able to sell these shares for more than what you purchased them for. So first things first, how can we determine if a company pays a dividend? How much the dividend is per share, and how often the company pays a dividend. I'm going to be walking you through it right now. You need to go to a stock analysis website. I like to use TMX Money as I like how it displays the data, and in my opinion, it's really simple to use. So first things first, you need to type in the name of your company. For example, we're going to be using Bank of Nova Scotia. So once you search for the Bank of Nova Scotia, it'll give you the ticker symbol, which is this three-letter acronym BNS. Then click on the search icon. So if you scroll down here, you will see everything you need to know. So companies that pay dividends either pay their dividends quarterly, which is the most common, yearly, or monthly, which usually tend to be paid out by REITs. In this example, you can see that the Bank of Nova Scotia, or otherwise known as Scotiabank, pays their dividends quarterly, which is every 3 months. You can see their dividend per share is 90 cents in Canadian dollars. If you want to see the dividends as a list, scroll up and click on the dividend tab. On the right, you will see the most recent quarterly dividends that the company has paid out under the amount column, and on the left, you can see the ex-dividend date. For those of you who don't know, the ex-dividend date is the date that you need to own a share by or purchase that share in a company in order to receive the upcoming dividend. So we can see that the most recent ex-dividend date for Bank of Nova Scotia was July 6, 2020. So if you were to purchase that stock anytime after that date, say July 7th or 8th, you will not receive dividends for that quarter. The date where investors actually get paid the dividends is usually a couple of weeks after their ex-dividend date, which you can see was July 29th, 2020. Now let's discuss how to compare dividends from different companies at a high level. So in this example, we're going to be looking at the Bank of Nova Scotia stock and the Granite REIT stock. The Bank of Nova Scotia pays 90 cents every quarter per share you own, and the Granite REIT stock pays 24 cents every month per share you own. As you can see, at first glance, we see that the Bank of Nova Scotia pays a dividend of 90 cents, which is a lot higher than Granite's dividend of 24 cents. However, we can't forget that the Bank of Nova Scotia's dividend is paid out quarterly, meaning it's paid out 4 times a year, and Granite pays dividends every month, therefore they pay dividends 12 times a year. So if we take Bank of Nova Scotia's dividend per share of 90 cents and times it by 4, we get $3.60, which is their dividend for the year. And if we take Granite's dividend per share of 24 cents and times it by 12, we get $2.88 for the year. So as we can see, the Bank of Nova Scotia shares actually pay more a year in dividends. So I guess we figured out the better dividend stock, right? Wrong. So the Bank of Nova Scotia may pay more in dividends per year, but how much did the Bank of Nova Scotia cost to buy in comparison to the Granite stock? So in order to find out which stock actually pays more per $1,000 you invest, you need to calculate the dividend yield. So the dividend yield is expressed as a percentage and is calculated by taking the annual dividend and dividing it by the share price. In the case of Bank of Nova Scotia, the dividend yield is 6.327%, and in the case of Granite, the dividend yield is 3.689%. If you don't want to calculate this number yourself, you can go back to the TMX Money and retype in the name of the stock, and it will show you the dividend yield on the summary page. So dividend yield formulas are not always the most useful or accurate due to the fact that the stock price of a company changes multiple times a day on the stock market and is very unpredictable. So when using the dividend yield as a tool to help you decide which stock to purchase, just keep in mind that this figure is subject to change. In addition, when choosing stocks that pay dividends, don't solely rely on if the stock has a high dividend yield, because companies can always cut their dividends if the economy or the business is suffering. Hey guys, I'm so sorry about that. I think my camera decided to stop recording randomly and I didn't realize. So what I was saying is, don't solely rely on if the stock has a high dividend yield, because companies can always cut their dividends if the economy or if their business is suffering. So when you are looking at a dividend paying stock to invest in, you need to value the stock as if it were not paying a dividend and look at its fundamentals. You need to look at their financial statements and determine whether or not the company has enough assets or cash on hand to pay their debt. You should also be looking at the company's net profit and assessing whether or not the profit has been increasing or decreasing over the last couple of years. Lastly, you should look at the company's payout ratio. So the company payout ratio tells you how much of the company's net income they paid to their shareholders through dividends. So you can find the company's payout ratio on the statistic tabs of Yahoo Finance. As you can see, the Bank of Nova Scotia has a payout ratio of approximately 59%, meaning that 40% of their profits are left for the company to reinvest in itself and grow. Ideally, you want to find companies that have a lower payout ratio. As a rule of thumb, anything below 60% is usually good. Okay, so to wrap up this video, let's go over whether investing in dividend paying stocks is really worth it. So you're a new investor and you're asking yourself, should I invest in growth stocks that pay no dividends, or more mature blue chip stocks that pay a dividend? So my opinion is that your portfolio should be diversified, in the sense where you have a portion of your investments that are tech and growth companies, but most of your portfolio should be made up of reliable blue chip stocks that pay dividends. And I say this because with dividend paying stocks, you are always being rewarded for your time in the market by giving you a steady cash flow every month or every quarter. Even during a market crash, assuming the company hasn't cut their dividend, you are still being paid to wait until the market regulates and picks back up again. So I just want to leave you with this last thought. I think it's really important to keep in mind that a lot of us won't have pensions or great pensions when we're ready to retire. So if you invest smart now by investing into dividend paying stocks, by the time you're ready to retire, the goal is to be able to live comfortably off your dividends, or at least have enough in dividends to help you cover your expenses. So that's it for today, guys. Thank you so much for watching my video. If you liked it, please give it a thumbs up. If you have any questions whatsoever about dividend paying stocks and why you should invest in them, please leave a comment below. And if you haven't already, please subscribe to my channel, as that would really help support me. Thanks everyone. Until next time. Bye.